What's up everyone, it's Scotty with MoneyVest. So in this video, we are going to be talking about Salesforce, and Salesforce is going to be reporting earnings after the markets close today. So I did a poll earlier in our Discord asking you guys which company you'd like me to analyze. I'm going to be analyzing all three, but the options were Dollar General, Lululemon, and CRM, Salesforce, and most of you guys have voted for Salesforce. So here's the video. I'm going to be going over the earnings expectations. We'll talk about the technical analysis. We'll go over the intrinsic value. We'll go over the, of course, technical analysis, as I mentioned, and the fundamental analysis as well, including the company's revenues, earnings, cash flows, balance sheet. Everything is going to be covered in this video. As always, if you enjoyed, find it helpful, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining, and of course getting access to all the buy and sell alerts, options alerts, trade ideas. Everything's going to be included, and the 16% annual discount that does expire at the end of this month, so 2 more days left if you're interested in joining. And not to mention the fundamental and technical analysis courses, as well as the options course, 50 to 60% off, coupon code LABOR4 if you're interested in taking advantage of that as well. So starting with what CRM is, right? So it says Salesforce is a customer relationship management software, and they are a cloud-based software, so there's not really any need for on-premise hardware or software. They basically provide from the beginning, from the lead all the way to sales to support. Everything is covered with respect to Salesforce, and lead management, opportunity management, customer service, marketing automation, and analytics. Everything is what Salesforce covers. And they also have a wide variety of other cloud-based applications, including Sales Cloud, Service Cloud, Marketing Cloud, Commercial Cloud, and App Cloud as well. And these right here are some of the many clients and customers that they actually have, which is going to be Coca-Cola, Amazon, we've got Apple, and of course Wells Fargo, Tesco, just to name a few. These are a few examples of companies that actually use their customer relationship management platform to track leads, track customer engagement, just build that relationship, customer support services. Everything is built into the software. Now, these are some of the threats or challenges that Salesforce has, right? So no company is perfect. Every company is going to deal with some type of challenges. So competition is one thing. There's other companies like Microsoft, Oracle, Sales Cloud, SAP. There's a lot of companies that are in this space. In fact, there's another one that one of my friends uses. I forgot exactly what the name was, but I think it was Viva Systems, right? So I think I could be wrong, but I'm pretty sure I've done a video on Viva Systems, and they are a very similar company to Salesforce. And again, fantastic revenue growth, profitability. I mean, it's just A+ quality stock. And I believe they're in the very similar industry cloud solutions, global life sciences, pharmaceutical, and other life sciences companies to realize the benefits of modern cloud-based architecture and mobile applications. So I think this is very, very specific to pharmaceutical, but this is also a customer relationship management software. Data security is another threat. We've got complexity, we've got cost, and changing customer needs because of new technological advancements. Obviously, we are, as a customer, always evolving with new technologies. But nonetheless, absolutely phenomenal growth in both revenue and gross profit. You guys know that I love these types of bar graphs where you can see the consistency in the company's top line and bottom line. $4 billion revenue, $3.1 billion gross profit. That's a very strong 75% margins. And that number has almost 10x to over $32 billion. And gross profit has also gone from $3 billion to almost $23 billion. Now, operating income has not been that great. I wish I could say the same thing for operating income, but it's not, because as revenues and gross profits have gone up, so have also the SG&A, that's your selling, general, administrative expenses. R&D, research and development, so operating expenses are also in a very similar trend. So what you want to see is, as revenue is growing, gross profits growing, operating expenses are going down, right? That's one of the best metrics to look at the company's efficiency. But in this case, there is no operating leverage, at least yet, and there is operating profit, but the company, again, the margins are not that great for Salesforce at the moment. And again, as a result, net income wise, they have been a little bit more fluctuating, and that's only because they've also had one-time charges with stock-based compensation, with a couple of acquisitions that I'll go over in just a minute. But shares outstanding has also not been great in terms of buybacks, because it's been going up from 600 million to almost 1 billion shares outstanding for the company as well. EBITDA has been kind of moving in the right direction, going from about 2.5 to over 6.6 billion as well. 74% margins, as I mentioned earlier. We got net income margins at just about 1%. The 5-year average has been about 7%, and free cash flow margins at 35%. So that's pretty good. We got EBITDA margins at 20% and return on common equity, assets, and capital pretty low for the company. So again, that's because of the more recent trailing 12-month GAAP earnings and net income for the company. So these right here are some of the one-time charges in 2022, which the company had to basically take into account when reporting for their GAAP numbers. And as a result, the net income is not as high as what it used to be. Acquisition-related costs. So SalesForce did acquire MuleSoft for $6.5 billion in 2021. And the acquisition-related costs total $1.1 billion in the fourth quarter of 2022. In total, SalesForce one-time charges were $2.4 billion in 2022, and these charges had significant impact on the company's net profit, which declined by 64% in 2022 versus compared to 2021. So we did have a lot of one-time charges. Now, balance sheet is okay, but it's quite surprising for a software company, for a cloud-based company, that they have a lot of debt. And I'm assuming some of the debt is got to do with the MuleSoft acquisition, because not the entire purchase must have been financed by cash, but instead some of it must have been purchased through debt. But I'm surprised to see like $14 billion of cash with almost $14 billion of debt, right? So cash to debt, negative, but barely, $63 million. Current ratio is over 1. Quick ratio is a little bit under 1. We got debt to free cash flow at 3.2. So it's, close to 3. I look for this number under 3 because we want to be able to pay down the debt using the free cash flow in under 3 years. Right now it's sitting at 3.2. So it's borderline concerning. So not really that much. Now, valuation 35.28 times on a non-GAAP basis, trailing versus forward. Of course, GAAP, it's really, really high because of the last rolling 12 months worth of numbers, because of the one-time charges I mentioned earlier. Price to sales trading at about 5 to 6, which is actually a little bit reasonably low for a software company. And price to cash flow 24 to 26 is also reasonable. It's not like undervalued, it's not overvalued either. It's kind of like okay, given the growth. This right here is going to be that growth rate for SalesForce in terms of EPS. So $7.45 expected to grow to over $14, almost $15 by 2029, all the way up to $23 per share for the company as well. So that's going to be a very nice consistent growth of 42%, 20%, 18%, 10, 10, 10, 13% around those levels. So we're looking at pretty high growth now, and then it's going to moderate down to like low double digits to like mid-teens for the company as well. So if you plug in some of these numbers for SalesForce, we're looking at a growth rate, 5-year CAGR of just under 15%, and the share dilution has been about just under 6% since 2013. If I go over the share dilution here and basically account for, let's say, since 2017, where they've like 700 million to 930 million or 993 million, then it's going to be obviously lower than 5%, but it looks like they've been consistently diluting shareholders. I mean, maybe recently, last couple of years, you can start to see that it's moderating a little bit, but that trend overall has been still upwards, right? Every single year they have diluted shareholders. So what I'm going to do is I'm going to keep that intact. Maybe I'll go with 5% share dilution. Growth rate, I'm going to pick 15% here for SalesForce. 20 times PE multiple, 12% discount rate because they don't pay out a dividend. So if you go over to CRM, trading at $212, they don't pay out a dividend, $206 billion company, 10% margin of safety, and about a 5% share dilution yields us a fair value of about $137, and right now it's trading at about $212. So 34 to 35% potential downside needed in order for this stock to be trading at its fair value, which I think is quite reasonable, right? Considering the valuation and the share dilution. Of course, if the share dilution was not there, 0%, we'd be looking at 176 as the fair value. But since the company is or has been issuing a lot of shares, we've got 5% share dilution, 15% growth rate, P multiple I think is pretty reasonable at 20, and 12% discount rate. I think that's what we need. So 137, 138 is going to be that intrinsic value. And of course, this is the overall sensitivity grid. Now going into these earnings print, it's going to get quite interesting here because earnings expected to be at just about $1.90 and revenue at $8.5 billion. And in fact, SalesForce was trading at $125 in December, right? So it has rallied quite a bit, over 90%, almost 90% of those levels. And of course, 138 was the fair value. So we were undervalued at some point last year. And from those levels, we obviously rallied quite a bit. This right here is going to be the technical breakdown where there is going to be a resistance to watch for SalesForce around here at these prices at 237. Support level is going to stay intact at 194. So this right here is going to be that level to watch. And of course, more closely speaking, we did have a little bit of a symmetrical triangle before we got that huge breakout, considering the prior earnings or prior catalyst here. We had a huge breakout, got rejected at 237, then sold right back down to fill this entire gap. Support level, like I said, is going to stay put at $194. In fact, it could even be a little bit higher here, closer to $200. So $200 would be a much better support in my opinion for SalesForce, or previous resistance acting as a support here. And then below that, then we'll be watching closer to 187 and 170s for SalesForce. But of course, my favorite value is sitting at 137, 138. So hope you guys enjoyed this video, and let me know your thoughts down in the comment section below. Of course, if you get a beat on EPS, beat on revenue, beat on guidance, it wouldn't surprise me one bit if you do see a pretty significant rally after hours. And 237, like I said, is going to be that next resistance and that target to watch. But any miss or any guidance missteps could potentially bring us down to 200s, low 200s, possibly even break below 200 as well. But like I said, my favorite value is going to be in the 130s. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Don't forget 16% annual discount for the Patreon and in the Discord, available for the next couple of days. And fundamental tech analysis courses, 50 to 60% off. Coupon code is going to be labor4. As always, happy investing, and I'll see you all in the next video.